Down, a recent survey found that more than two-thirds of Filipinos are expecting a recession by the end of next year.
And the Bangko Sentral says it will save as much as 2.4 billion pesos in the shift to polymer banknotes. We begin our broadcast with President Bongbong Marcos assuring the business community that his administration will ensure the growth of local markets while attracting more foreign direct investments. Now, speaking at the annual business conference of the Philippine Chamber of Commerce and Industry, or PCCI, the president said he is committed to fostering a sound environment where business can thrive and continue to be a driver of growth.
Many times when we talk about new investment, the assumption is always that we are talking about foreign direct investment. However, what we sometimes have been missing, and I think it is something that we certainly recognize as a huge potential for the transformation of our economy, are the development of local markets.
The president said the government will also work on improving the ease of doing business further to attract more investors. He said his administration targets to make the Philippines a top investment destination.
I reiterate my vision of improving our business climate and elevating the status of the Philippines as a top investment destination through various endeavors. We continue to harmonize efforts of all investment promotion agencies, government agencies, and local government units to effect greater synergies.
On the sidelines of that event, President Marcos said he will remain as agriculture chief for now, citing pressing issues within the sector. Marcos said he will stay as the agency's secretary as the problems of the sector have become too difficult, that it takes a president to turn them around. The president said that although he's chief executive, he is also giving his quote full attention to the Department of Agriculture. He also said that he will relinquish the title once the agency's functions are properly institutionalized and structural changes have already been made.
Very deeply embedded ang mga problema natin sa agrikultura. Ito ay nangyari sa napakaraming taon, kaya hindi ganun kabilis, hindi ganun kadali na ibalik sa ating magandang sistema dati. Kaya I think I am still needed there.
Meanwhile, Marcos said that he has yet to appoint a permanent health secretary because he wants the country's COVID-19 situation to, quote, normalize first. The president explained that although the country is still under a state of calamity, it must stop treating COVID-19 as an emergency, citing the need to open up businesses. For the president, structural changes are not needed in the DOH, but it needs to improve its methods of handling the pandemic.
We cannot look at it the same way. It is the same situation that I have in the Department of Agriculture. We have to get away from the emergency stance of the DOH, because we have to open up businesses. We have to make the Philippines more hospitable to travelers, both business and tourists.
Meanwhile, the Philippine economy is seen to grow slower in 2023 on the back of higher interest rates. Fitch Solutions expects the country's GDP growth to clock in at 6.2% next year, slower than the 6.6% forecast for this year. Fitch Solutions attributes the looming slowdown to headwinds such as higher domestic interest rates and deteriorating external position. A wide trade deficit is also seen to exert further downside pressures on the peso. However, the research firm says the Bangko Sentral's aggressive hiking cycle will provide the local currency some support. The BSP earlier said that it is prepared to use liquidity enhancing and management tools to control the peso's volatility. This includes the Bangko Sentral's US dollar repo facility, the exporter's dollar and yen rediscount facility, as well as enhanced currency rate risk protection program. The peso has slumped close to 14% to date against the dollar, but the currency is yet to reach that 60 psychological level. But is it only a matter of time? Let's get insights from Domini, Velasquez, Chinabank's chief economist. Domini, good day. Thank you for joining us again. The peso has yet to breach that 60 to a dollar barrier. BSP says they're ready to smoothen volatility, but not there to actually defend a particular level of the peso. But given that it's been weeks that we've been holding on to this level, is that really the case, or has the BSP started to define the level that the currency can actually take?
Hello, good morning, Jess. Good morning, Danie. So yes, the peso has been at the 58.859 level for the past 3 weeks. I guess it looks quite very depreciated because we came from 51. But actually, if you look at the trend of the depreciation, so you look at since January when we had 51 peso per US dollar. So the peso depreciated by around 13.7% at that 56.45 level. That was the previous high. And then you had that off cycle with the BSP. Then the peso at 59 just depreciated by around 4.3%. So there has been some interventions by the BSP to prevent the depreciation of the peso. But yes, like what you said, of course, the peso, it acts like a price of a good or a service. It goes to its actual equilibrium price. So for us, we think it's a little bit higher, so possibly higher than 59. But of course, the BSP is trying to smooth volatility, partly maybe waiting for remittances to provide some support. So the depreciation is not as volatile as what they want.
All right. Now, Domini, we also had the president himself stepping in and tweeting to defend the peso. Is this a more symbolic kind of tweet, or are there fundamental things that he can actually do as president, which is supposed to be a completely autonomous function from the Bangko Sentral to stem the peso's depreciation? What was meant by this tweet?
I guess in the short term, it's part of the communication of the whole economic managers with the president also, trying to pacify the markets that it's not going to depreciate so much that it will hurt the economy. In the short term, I would think not so much as opposed to that moral suasion. But in the long term, of course, what's usually been said, increasing the competitiveness of your exports should actually help your peso, making sure we're not as dependent on some of the imported products. Supporting the renewable energy sector would actually help imports. So those things are quite medium term. It's not automatic, but the president does have that capacity to improve our managing of our FX eventually.
Okay, very interesting points there. Now, going back to what you mentioned about the interventions of the Bangko Sentral, are these things, a normal thing that the central bank should be doing at this stage? To what extent are these temporary interventions, and how can we compare to other emerging markets? Are they also stepping in and selling, let's say, their forex reserves?
Yes, if you look at other emerging markets, for example, Thailand and India, they've actually used up more reserves than us. Yes, admittedly, we've used up a lot of reserves already. Reserves is $93 billion as of end September, compared to, I think, maybe 107 earlier this year. But reserves are really there for that, for that trading day. So the BSP has actually been beefing up its reserves during the pandemic. If you look at our reserves now, it's actually just similar to pre-pandemic levels. So it's still quite sufficient. So the BSP does have the capacity to actually still manage the liquidity.
Now, I want to pick up on one point that you mentioned earlier, that we are expecting some support from remittances. Add to that, of course, foreign direct investments. But really, how much of an insulation will this provide, given as well, of course, that we're dealing with a global slowdown?
I guess so. There are two things when you talk about the currency, right? So you have that US dollar being quite strong. It's strongest since maybe 2000, early 2000, right? And still growing stronger. Actually, for the year to date, the US dollar appreciated by around 17%. So there is that. There is that seasonality in terms of exchange rate. Usually, you see some appreciation in October and November because of the the inflow of remittances. So there is that kind of support. I think that's volatility that's being managed by the BSP. But of course, the trend of the dollar is really going higher. So that's why all other currencies are depreciating against it. If you look at other countries, going back to the point a while ago, other Asian currencies have also depreciated. I think the Japanese yen and the won has depreciated more than the Philippine peso, or actually similar to the Thai baht.
Okay, can you comment on whether, some economists believe that the peso weakness is simply due to dollar strength? And the movements of the Fed in raising the rates and the differential between their rates and our rates. But could it also be fundamentally driven by the fact that our exports are still at least in negative territory year on year, despite the fact that, we've already reopened the economy, manufacturing should be in full swing, plus, of course, the import bill and the trade deficit that is widening. So is there a bigger issue here that's going to be more long-term pain for the peso beyond what the US Fed does?
Yes, actually, that's correct. There is that structural trade deficit that we have. So, as I said, when you look at the currency, you look at two things, right? So you also look at the peso. Why is the peso weak also? Because we have a huge trade deficit. It means we need more dollars to import more than we're gaining in terms of dollar inflows. So at I think second quarter, most of the huge jump in imports was really driven by price effects, meaning the prices of the imported goods or the goods that we import, they were actually quite high because you had global commodity prices up after the war. But now we've seen some of these price effects subside. Global commodity prices have gone down a little bit. So if you look at the latest trade figures of the PSA, actually consumer goods and capital goods have driven that import bill. And then on the other end, you have your exports. Previously, it was quite okay, growing modestly. But in the last 2 months, it was negative growth, really because of recessions in the US. So you have this, you have, I guess, a little bit of tempering of your imports growth. But exports is now doing worse than previously. So you'll still have that kind of trade deficit, wide trade deficit, I guess, all throughout 2023, which will really be the driver on the weakness of the peso.
Sorry, Domini, can you clarify if our import bill is showing capital formation already, which means that, there will be long-term growth because of this trade deficit?
Yes, hopefully. So usually when you see increases in capital goods, those are used for infrastructure, for building materials. So that is actually quite good. We've also seen consumer goods up in August. So durable goods such as cars, manufacturers. So it looks like your inflation has not really been the impact of the inflation has not been so much as to reduce imports of consumers. So that is actually good for the economy, good moving forward for 2023 and beyond.
Now, of course, one clear thing here is that the BSP has been aggressive when it comes, of course, to hiking rates here. But at the same time, they want to maintain that 100-point differential with the Fed. Is that a good enough margin, or can we accommodate a narrower gap here? How do you see them moving or acting in their next set of meetings?
Well, for me, we're just taking off from the BSP. If they think that is a good enough, they're very comfortable with that level. Well, it just means that the BSP will have to be more aggressive than they originally planned, right?
Okay, and of course, we still have the rate hikes, the recent rate hikes. Have these kicked in terms of, has it arrested inflation expectations moving forward? And will we be feeling even more pain when it comes to consumption or consumer spending?
I guess in terms of inflation expectations, the aggressiveness of the BSP has actually led to a lowering of inflationary expectations, or lowering of the anchoring of inflationary expectations. Most of the economists expect inflation to settle at maybe 5.5 to 5.7% for the year. We really can't do anything about that. It's a supply side issue. But for next year, I think maybe 4% or a little bit higher, which is actually quite okay already.
Okay, very interesting points there. Thank you so much, Domini Velasquez, Chief Economist over at Chinabank.
Let's pause for a quick break, but coming right up after that. Filipinos are worried that the country may enter a recession by next year.
More of that and other stories when Business World Live returns. Stay with us.
Watching Business World Live here on One News, I'm Jess de los Santos.
And I'm Danie, Laurel.
The arrival period for sugar ordered overseas has been extended to the end of October due to shipping delays. Through Sugar Order Number 3, the Sugar Regulatory Administration or SRA extended the arrival deadline for the 200,000 metric tons of foreign sugar to October 31. This is because of vessel delays and a lack of availability of container vans that's being experienced not only in the region but also around the world.
The Bangko Sentral says it will save as much as 2.4 billion pesos in its move to shift to polymer banknotes. The central bank attributes the potential production cost savings to the polymer bills' longer lifespan, as polymer banknotes are said to last up to 4 times longer than paper-based notes. It would translate to lower replacement costs. Now, higher savings would mean higher earnings for the BSP, half of which would accrue to the national government. Now, aside from its durability, the Bangko Sentral also boasts of the polymer bills' eco-friendliness. Senator Pia Cayetano, however, challenged the BSP's claim, saying that polymer is not biodegradable as opposed to paper banknotes that use natural materials. The senator also raised doubts on the central bank's claim that polymer bills use less water in production.
Who should pay the financial toll of climate change? That is a question the developing countries are pushing to the top of the climate agenda at the 27th UN Climate Change Conference in Egypt. Eric Crossan gives us the details courtesy of Bloomberg Quick Take.
Who pays the financial toll of climate change? Greenhouse gas pollution is making extreme weather worse in countries that bear little responsibility for causing the problem, and they want help coping. Take Pakistan. It contributes less than 1% of global greenhouse gas emissions, yet it is the 8th most vulnerable country to climate change. Devastating floods in the country this summer have pushed the issue to the top of the climate agenda at November's COP27 in Egypt. The lines of the debate are clearly drawn over what's called loss and damage. The loss is of lives or cultures or species that can never return, and damage means damage to infrastructure that will need repair after climate-driven disasters. That's where a global climate agreement would come in, with rich nations contributing to their poorer counterparts, while everybody continues the fundamental work of slashing emissions. Developing countries want financial and technical help, but the US and EU point to past episodes of misused aid and are reluctant to cut blank checks. Also, there's something even more basic to consider. How do we measure climate impacts? Scientists in the last 10 years have developed reliable ways to estimate how much worse greenhouse gases are making disasters. The rain in Pakistan, according to World Weather Attribution, was 50% more intense than it would have been before industrialization. Now, economists are taking that work a step further by attributing dollar values to climate-related losses. From 1990 to 2014, according to Dartmouth researchers, the combined pollution from the US and China cost Pakistan $60 billion in GDP. They cost the world $1.8 trillion. But how this scientific research lands at COP, or if it lands, is anybody's guess. Coincidentally, Pakistan holds the rotating leadership role in what'll be the largest negotiating bloc at COP27. It's called G77 plus China, and it includes more than 130 countries who generally support a loss and damage process. Dug-in positions suggest no resolution is likely when nearly 200 countries assemble in Egypt, but agreeing to talk about it, as they tentatively have, is an important first step.
More than two-thirds of Filipinos are expecting a recession by the end of next year. That's according to a survey conducted by consumer credit reporting agency TransUnion. 76% of over 1,000 surveyed Filipinos agree that the economy is either already in a recession or will enter a recession by end of 2023. 44% said inflation was their top concern, up from 35% in the last quarter. In September, headline inflation accelerated to 6.9%, the highest in 13 years. The TransUnion study said that as a precaution, consumers have taken action in response to potential recession, with some building up their savings and others reducing or paying off debts.
This from the Philippine Star. The Philippine Franchise Association wants more Filipino franchise brands to go international in the coming years. The PFA aims to double the number of Philippine franchise brands that have expanded globally in the next 2 years. This as the PFA banks on the momentum of the Philippines hosting twin international franchise events. Currently, there are 25 Filipino franchise brands in the global market. The PFA says it is working with the government to meet its target of 50 franchise brands expanding internationally.
No reason why we can't go global for these brands, of course.
Absolutely. Exciting times.
Those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. Now, Dan, we did see gains halted yesterday, 7 days of wins here, at least for the index, as foreign selling resumed. At the same time, you have government saying that inflation might actually cut into growth, especially for next year. Tell us more.
Well, we do seem to be swinging between gains and losses, Jess, but the good news is we're holding on to that 6,000 level. So, we actually opened in the green. Now we're back in the red. But like you mentioned, this does come on the back of Asia the entire Asian markets as well being sold off yesterday. Particularly Hong Kong shares there touched a 13-year low on those comments of COVID zero continuing over in China, which just dampened the overall sentiments. Whether this is domestic driven or driven also by those comments, is a key question there. Now let's take a quick peek at some of our movers here. You've got a couple of gainers actually. Meralco and JG Summit holding their ground here, up by close to 3%. But notably so, you've actually got Globe Telecom being sold off. It was actually down by more than 5% last I checked. You can see here on the chart, how that's been moving here, already down by 108 pesos just today. We don't really know at the moment what is driving this, but definitely one stock to be watching out for today. And still on the telco space, I did want to take a quick peek at Dito, which is going the other way, even as if you see the year to date, it's still nevertheless on the downward trend. But they are up by 3 centavos, which is up by 1 2/10%, following a close to 5% jump already yesterday, as they said that there might be a potential share sale. They will be seeking shareholder approval in December for the sale of some of their shares.
And lastly, let's end the week by taking a look at the peso. That figured heavily in our discussion with Domini. How is the currency doing?
Flattish at the moment, Jess, but like she mentioned, possibly some interventions already happening there that's preventing the peso to slide, worse than it could have without those interventions. And she does expect, some weakness going forward here. But, just to say that the support at 59 to the greenback, which is nevertheless a record low, has held for 3 weeks now. So hovering at those levels, 58.95 for the peso.
And that's it for today, October 21st, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.